Now we're talking. Back to work. Well done today. Fantastic job today. We planned our trades last night. We trade our plan today. Hope you guys made a lot of money on the game plan we talked about last night. And I got some more good news tonight. The charts look beautiful in front of us tonight. I've got 4, maybe 5 good trades I'm tracking for tomorrow. By the time we're done the video tonight, you'll have an easy roadmap to make money on Thursday. Know exactly my favorite trades as we go into day number 2 for J-POW's testimony on Thursday morning. Now, before we jump in and talk my favorite trades for tomorrow, make sure you subscribe to the channel. By now you should know, right? You don't want to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. Either way, thank you so much for tuning in, stopping by, supporting the channel. But enough of the intro. Let's get ready for Thursday. It's been a fantastic week so far. Let's keep the good times rolling. Charts are all ready. Nasdaq triple Qs are ready. I got the E-mini and the SPY ready. I have 3 really important clues that are really tipping us off, telling us where the best entries and exits, the best winning trades are going to be tomorrow. One of those important clues is right here on the 60-minute time frame, and that's pretty obvious. We are a bullish overall market on the 60-minute. That will give us our directional bias, our directional filter for our trades tomorrow. But I've got 2 more important clues. Now, before we dive into the tick charts and talk about those 2 more important clues and timing the perfect entry, let's make sure we check our schedule for tomorrow, because there's 2 important things you do want to be aware of. First of all is the ECB announcement. Tomorrow morning, 7:45, 8 o'clock Eastern Time, 8:15 Eastern Time, we'll hear from the ECB announcement. ECB, of course, is the central bank in Europe. It's just like the FOMC announcement here in the US. That's definitely something we're tracking for tomorrow. So if you're in Europe, trading the pre-market stuff tomorrow, be aware of the ECB announcement. Later on in the morning, we know J-POW's back in the microphone. Now, today, we heard from J-POW today, 10 o'clock Eastern Time. We talked about that last night. I don't expect him to have as much of an impact tomorrow as he had today. I will be watching closely. That is something we're on our radar for tomorrow. It does seem like right now, everyone's waiting for that non-farm payroll number coming out on Friday. I mean, J-POW said pretty explicitly today, he said, we're expecting to cut rates, but we need more data. We need to see more evidence that inflation is slowing down. And when he talks about that, he's definitely talking about that employment number coming on Friday, that CPI report coming out, 10, 15 days from now. So we definitely assume now the markets are focused on the employment number. I will be keeping an eye out, though, with the ECB tomorrow morning, and I'll certainly be tuning in tomorrow with J-POW around 10 o'clock Eastern Time, but I don't expect there to be as much focus on J-POW tomorrow as there was for today. And that means tomorrow night, you better come back tomorrow night. We'll talk a lot about plan for the non-farm payroll number coming on Friday. But back to our charts, though, because we know, of course, the money is made on the charts. It's good to know when the news is, but we trade off the charts every day in our trade room. Now, let's go over my favorite trades here for tomorrow. I mentioned there are 3 total clues we're tracking for tomorrow, and I got 4, maybe 5 trades I'm watching for tomorrow. One of the clues is right here on the 60-minute time frame, the overall bullish directional bias or directional filter. But now let's drill down to some tick charts. This is a 7,000 tick chart you'll see linked up there in the upper left-hand corner, and that, my friends, is the 21 EMA. In case you're tuning in for the first time, it's pretty much the only indicator you need to come out and find lots of winning trades with us every morning in our morning trade room. There are 2 additional big clues on the tick charts. One of them is that strong run down that we saw, not today, right, but yesterday. Now, why is that important? Well, because anytime we see a strong move like this, we expect the bears in this case to be trying to retest that low. I think of this right now as unfinished business. There's the same thing on the Nasdaq, so keep that in the back of your mind. The much more important clue, though, is this bullish move into a trading range. Now, I know most of you guys watching right now, you've taken my free video classes. You know how ranges work, but if you don't, ranges are magnets, and they like to rotate back and forth. They rotate down, up, down. And so ultimately our job in a range market is to buy the rotations off the low, sell the rotations off the high. And because we have an overall bullish bias, we'll structure these entries a bit differently depending on whether or not we're buying off the low or we're selling off the high. So put all these three clues together. It's an overall bull bias on the 60-minute, a strong move down, unfinished business, if you will, for the bears going lower, and a bullish move going higher. I mentioned earlier, I have 4 different trades I'm tracking for tomorrow. Why don't we cover the first 2 of them right now, and then later on in the video, we'll go to the Nasdaq, and we'll cover the other 2 to wrap up the lesson here for tonight. Let's start first with the price going lower, and we'll talk about the price going higher. If we end up going lower, we know we have an overall bull market overall. The range above us acts as a magnet. So I'd like to be a buyer down here. I'd like to buy at a support level. We call these pendulum swings. The amount that we go above the range is the amount that we go below the range. Lots of support down there. I'd like to buy going back up into that trading range, but we know we have that bearish unfinished business down there. So I'm not a big fan of picking the bottom. What I'd like to do is try to trap in some rookies. This would be a horrible place to be selling right now because you're at support below a bullish trading range. I'd like to find one of these patterns right here. Get the breakout. Don't pick the bottom, but use one of these 1 try, 2 try, 1 try, 2 try, 1 try, 2 try. We call these 2 try failure patterns in our free video classes. I'd like to trap in some of these rookie bears and buy right into those stops going higher. Now watch closely here because we oftentimes get a nice run. Remember, ranges love to rotate back and forth. So if I can trap in some of these bears down here, use that 2 try failure pattern, I would love to then trade that rotation going higher with one very simple pattern, which is called a bear trap. Now, bear trap patterns are really simple, but you got to learn them. It's a higher high in price and move right below that low. So again, let's get down to support underneath that trading range. Let's trap in the bears. Don't pick the bottom because, again, it may keep going down to retest that low. Once those rookies are caught, now we got them trapped in, and we can buy into those stops and fuel the move going higher. As it goes higher, as it tries to rotate back and forth like that, we now look for that bear trap pattern. It's a higher high in price and a move right below that low, that nice strong green candle closing firmly above the 21 EMA. You guys will learn more about that stuff in our free video classes, right? That's a very, very simple way to look at it. Now, sometimes what happens is, sometimes we get this very strong breakout down. We get the bears trapped in like this with 1, 2, we get our initial entry going long, but what happens is the market kind of holds the underbelly of the range. We get our 1-to-1 first target, our stop moves up to point of entry, right? Remove the risk, lock in a reward, and every once in a while, the market will go back down and retest that low. This is one of my favorite trades. It's called a double bottom reversal. So if they go back and retest the low, don't freak out. This is not a reversal, right? It's simply a double bottom. Remember, it's an overall bull market. Remember, that range overhead is a magnet. It wouldn't surprise anybody if they tried again to go back and kind of finish up that unfinished business at the lows there. But again, I will look for that same game plan. Trap the rookies in. Again, I don't know. It may keep on going, right? I have no crystal ball here. I'm going to trap the bears in, use that 2 try failure, trap the bears in. And as the market runs higher, grab that. Remember, higher high in price, and grab that bear trap entry below that low, right? Makes sense on that? I call these double bottom reversals. It's basically a 2 try failure. We take our profit, they hold the underbelly, happens every once in a while, and they go back to retest the low. We don't pick the bottom. We 1, we 2, we trap the bears in, we've got the bear trap and the rotation back up to the side of that trading range. Now, let's talk about one more variation of this. What if we do get a strong run down? That should not surprise anybody, not with ECB tomorrow and not with J-POW. Now, if I see a strong run down, this is going to be a retest of that low. These oftentimes will bounce really, really hard off those lows. In other words, I would love to go down. I would love to trap in some of these bears, right, and buy it back up again, that same two-try failure pattern I keep talking about. And I certainly wouldn't mind a double bottom down here as well. That would be fantastic. But you know what? Sometimes we don't get the entry. Sometimes it runs lower and bounces so hard that we don't get the entry down there, and it begins to grind going higher. Now, one thing about these grinders, if you're anything like me, these will drive you nuts because you don't get the entry you want down here, and the market begins to grind up, and I swear the market laughs at you while it grinds up. Whatever you do, don't chase after it going higher. Watch closely here. Draw a trend line off the highs, bring it down off that low, and then look left, and think about where you have some prior swings. And my kind of goal is always is I want to get in. My favorite trades are little bear traps around the low of that channel. We call this the first test is the best test, right? The first test of that channel. And this could be any of the entry patterns you guys are learning in the free video course, right? It could be a bear trap, like I'm showing you here. We get underneath the moving average, right? Bears get stuck underneath a bullish market. Under the moving average, bears get stuck with a failure. Could be a failure into pullback combination. I get a bunch of emails on that today from you guys, but I wouldn't mind that at all tomorrow, right? Bear trap, failure pattern, pullback combination, any of the entry patterns you guys are learning in the free video course. We call these V bottom reversals off of that low. All right, now let's slow down for a second because I know that most of you guys and gals watching right now, you've taken my free video course. You know all these entry setups. You're making money with traps and failures and pullback combinations. But if you're watching for the first time right now, this might be a brand new language for you. I do look at charts a bit differently than I think a lot of other YouTube channels do, but don't you worry. I teach all these entry patterns. I have hundreds of examples of traps, failures, V bottoms, double bottom reversals. I teach all of it in a lot more detail in our free video classes. I'll put a link up top here for you. I'll hook you up. I'll put a link up top here for you, upper right-hand corner. Grab that link and take that free trading course because the strategy you'll learn will teach you a simple trick we use in our members trade room to know exactly where the best entries are going to be each day. Then I want to help you start making money on your own. I'll teach you 4 of my favorite entry setups to help you time the perfect entry and start making money on your own. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Top Step or Apex, hit that link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And also, too, keep in mind, I'm going to put all the important links tonight in the description of the YouTube video. Put the free class link. Start there for sure. We trade together every morning in our trade room, 8 o'clock Eastern time. I'll put all the details in the description as well. And if you're on Twitter, I post a lot of updates and psychology and chart updates on Twitter each day. If you're on Twitter, I'll put my handle down there. Give me a follow, and I'll see you on X in between these videos here on the YouTube channel. So now we've covered half of the game plan for tomorrow. We've talked about how to buy this thing, not pick the bottom, right, but buy off of that low. Now we have a little bit more difficult job as we go higher. As we go higher, there are 2 very simple, I think pretty simple ways, not the easiest, but I think they're pretty simple patterns. I'm looking for to buy or sell as we go higher. Let's go move our lesson now to the Nasdaq. Nasdaq's getting lonely over here. I see over here, Nasty. Let's do this. Now on the Nasdaq 60-minute chart, the 60-minute time frame, we don't want to overthink this. What is the general direction on the 60-minute? And you can easily see, even though we got that sharp pullback yesterday, we're still pretty bullish overall on the 60-minute. That is our directional bias. Now, we do not trade off a 60-minute time frame. In fact, I don't think trading off time charts, minute-based charts, is the easiest way to do it. I think tick charts make everything easier. This, of course, is a 4,000 tick chart. You can see up top there, and the same 21 EMA. The Nasdaq has the same 2 additional clues. We have a strong run going down from yesterday that is unfinished business, and nobody should be surprised if we wind up taking out that low, and then bam, right back up into that trading range. Because again, that trading range is a big magnet. And what do ranges do? They love to rotate. The amount below the range, the amount above the range, they love to rotate back and forth, right? We talked about on the S&P. On the S&P, we talked about getting those 2-try failures, getting those double bottoms, getting that V bottom off of that low. So the exact same game plan we described on the S&P can absolutely be translated onto the Nasdaq as well. Now, let's talk about going higher. Going higher is not going to be as easy because, well, one thing is we're overall bullish. So if I go higher, I got to be very careful to short off this thing, right? I like the idea of the short, but we have to be a bit careful. We'll talk about how to do that here in a second. Also, too, is as we go higher here, I don't want to buy high, right? I want to buy as low as I can. So it's a little more difficult. Not impossible, but a little more difficult. So this one pattern we always use, one setup to avoid buying high. If this thing begins to rip and run higher, I'm going to use what I call a bear trap. We mentioned this before. On the S&P, it's very simple. It is a strong run up, it's a higher high in price, and a move right below that recent low, right? Again, these are called bear traps. There's one right there, right? We go up, we pull back, we go higher, and we pull back right below that low. Very, very common whenever we're buying a bit too high, right? We're going to buy that bear trap, higher high in price, and that trap below that low. Now, at this point, if we can push through this area, and we talked about this last night, right? Last night's video, we talked about how we had that range down there. And if we were to break out of that trading range, we look for what? A breakout pullback. Let's do it again. I'll tell you right now, one of the easiest ways to make consistent money is to learn to trade breakout pullbacks. They sound pretty easy. I think everybody knows kind of intuitively what a breakout pullback is, but a lot of people struggle with them because you can't pick the bottom on it. Let's talk about that. So if we go higher here, right, again, on the way up, looking for that bear trap on the way up here, this will usually end up being a measured move, by the way, the breakout leg into the measuring leg. Just be aware of that, right? So if we get that bear trap going higher, that is usually the first leg up. We talk about measured moves a lot in our free video courses, so hopefully you guys have learned those already. But think about where that measured move is. Now, once we wind up getting that nice strong run higher, I don't want to buy high. Now we do is we flip this area from an area of resistance now to basically to an area of support. We flip this area now, right, like this, into an area of support. So we start blasting going higher. We then wait for that pull back, and we use what was overhead resistance. We use that now as support. Now, let me saw back here, right? We don't know how far that pullback will go. Nobody does, right? Anybody who says they do, they're naive. Give them a few more months doing this, and they'll be humbled by the market like everybody is. So I'm not gonna pick that pullback, right? What I will do though is I'm gonna wait for those bears to come in and let them try, right? Let them wrap that rope right around their neck. Let them dig the proverbial grave, if you will. 1 try, 2 try. Remember, it's an overall bull market, right? Overall bull market. I want to see a strong breakout. We want to push this thing higher, right? Get that momentum. Remember, anytime we see a strong move, what happens? It's unfinished business. Right? Think about strong moves as unfinished business. All right? That's the way to think about strong moves. Anytime I see a strong move, it's unfinished business. They want to retest that high. So if I see that strong move again, and again, S&P too, right? S&P and Nasdaq both apply to this. If I set strong run higher and we get that sharp pullback now, it's not a reversal. Trap those bears in. We know where the market wants to go. It wants to go back and take out that high again. And we use that same thing, that failure and a trap combination, right? That 2 try failure, 1, 2, and then as the market runs higher, we have that shallow pullback, that higher high in price, and then we look for, right, that bear trap going higher. So think about the same thing we use today, right? Is this basically the same game plan we'll use for tomorrow. The key is don't let a big move higher fool you, right? Don't go chasing after it because, again, breakout pullbacks are really, really common. All right, by now, maybe you're wondering, all right, how do we short this thing? right? How do we short this thing? Because again, right, get J-POW tomorrow, ECB tomorrow. It's a range, and so we know that ranges love to rotate, right? So can I sell off the high here? I can, but again, remember, you have to look at this through the lens of that 60-minute time frame, right? It's an overall bull market. So there are two types of entry patterns we look for to short off the high into resistance, going back down into that trading range. One of them, you probably know this already, is called a crown reversal. We go up, we run into resistance. We don't go through it for a breakout pullback, right? But now what happens is now the rookie buyers come in and they're not paying attention. Right, the buyers are not paying, right? They're chasing after right now. Not enough proof yet. If we start seeing buyers trying once, buyers trying twice, I'm going to look for what I call a crown reversal. It's nothing more than a bull trap. There was one right there and one right there. The one over here is perfect from early this morning. We go up, we pull back, buyers once, go lower, buyers twice, right above that high, right? See a little lower low, that lower low in price, and your signal, of course, it's a bull trap signal off of that high, right? A bull trap signal off of that high. Make sense? Okay? We have to look for this crown reversal because, again, we're so bullish overall. Right? It's a bullish overall bias. So I need to be a little more patient and more cautious on the entry as opposed to if I run lower, well, we're bullish overall, it's 1, 2, and back up from there. If I go higher, though, I have to remember we're overall bullish. So as we go higher, buyers try once, buyers try twice, and I need that bull trap. I need that bull trap. Why? Because I have to sell as high as I possibly can. Why? I don't want to sell as we're going lower because we're overall bullish. For all I know, we're going to pull back and get whacked right back higher again off the low of this channel. So I have to make sure I'm selling as high as I possibly can, and to do that, we'll use what's called a crown reversal pattern. Now, just like we talked about earlier on the S&P, I love the idea of that crown reversal, but sometimes we don't get it. Sometimes the market runs up, it takes out that high, and it gets whacked right back down again. Watch for this pattern now. If it basically V-tops, right? V-tops off the high, pops down, and begins to grind. Now you know what to do, right? Mark off that low, mark up off that high, and when we talk about look left, find some prior swings. My favorite trades are always just a little bit above a prior swing, and as mentioned earlier, this could be any entry pattern you guys are learning in the free video course. This is that first test is the best test, right? The first test is the best test. The most important thing on this is again, it'll hold these highs. It won't keep running. Now, I will say, right, if we run up and then V top, that's okay too, right? That works as well too, right? As long as we get that kind of V top and pop right back down, that grinding motion going lower, it'll separate off the 21 EMA, right? And that will give you then that pop up, right? And that short back down off of that high, right? Those V top reversals. And you know, we might get lucky tomorrow, right? We might go up, V top or crown reversal off the high. We might get that short off the high, run that sucker back down. Remember, think about that pendulum swing, right? Pendulum swing back down again. We take that pendulum swing out. The bears chase after it. They get trapped 1, 2, and whoop, right back up into that trading range. Again, it'll be that V-top or that crown reversal off the high, and it's simply going to be that two-try, this sequence right here, right? Two-try failure into bear trap, going higher, right? We pull back below the low, 1, 2, buy into it. As it runs higher, it's that shallow pullback and that move right below that low because we're buying as low as we possibly can. All right, guys? Hopefully that makes sense, and that's the plan now for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with me. The markets are complicated. There's a lot to learn as a new trader, but I'll tell you the easiest way to start making consistent money in any market you want to trade is to learn and trade along with us every morning in our trade room. I'll put all the important links you need, the description of the video, the free class links, definitely start there, our membership trade room links, and of course Twitter feed will all be in the description of the YouTube video. Any questions, concerns, any issues getting started, please don't be a stranger. Megan and I are always here answering calls, answering questions, helping out with tech support stuff. stuff if you guys have any questions along the way. So keep in touch. Don't be a stranger. In the meantime, enjoy the rest of your evening. Thank you so much for sticking around all the way to the end. Have a great evening. We'll see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. If not, same time, same place tomorrow. Get ready for Non-Farm Friday. As always, guys, my name is Joseph. Thanks for being here. Be well. Be nice to each other out there. And you better be here next time. Adios, amigos. Bye-bye for now.